Hello, welcome to successfultradings.com. In today's video, we are going to tackle on the topic of support and resistance trading for beginners. Why is support and resistance trading in general and for beginners in particular important? Because that's one of the basic strategy, if you will, to find trades. So in this video, we are going first to define what support and resistance means, then introduce to you natural support and resistance, then price resistance, and lastly, we will showcase examples where you can leverage this knowledge in order for you to start growing your accounts. Without any further ado, let us go ahead and get started. Alright, very good. So let's start. We will prepare this little few slide on here, but definitely we will spend time on our TradingView chart, charting tool to talk about the topic of support and resistance trading here in today's video. So for us, let's go to what is support and resistance. Well, support and resistance, support will mean that, hey, when a price is coming down, yeah, it's fine buyers at a certain level. That's really what it is, meaning the price will be bouncing at support zone. Also, it doesn't have to be exactly a price line. It's usually a band. We're going to show you, but for you, notice, use that. That's why we are putting this together here. Let's move this, sorry, as a concept of support area, because it doesn't have to be exactly, the stock will deviate from there. Sometimes traders, they get caught up into, oh, the support has to be exactly at this price. No, it's an area with tolerance, right? So same thing in terms of resistance area. It's a level of price, a range of price, if you will, where the stock will have a hard time continuing any higher because there are no new buyers. Because at that level, traders are taking profit. That's really what support and resistance is in layman terms. So now let's go ahead and in the next, in the first step on here, after this definition of what support and resistance is in trading, as a beginner, there are these new concepts that you're going to encounter. So for us, we most likely will be spending time creating specific video to each one of them. But as of now, notice that because you're going to see them shortly in the chart on here. So let's put this in presentation mode and I'll start highlighting them. Where's my highlighter? What's my color? So this one is something that you will definitely need to know as a beginner. So that's a natural support and resistance. Again, we talk about support when the price is coming down, and we talk about resistance when the price is going up. So VWAP stands for volume weighted average price. We will dedicate a video. Actually, we have a video on how to show you how to use it. We have several videos. We are going to put them in the link of the description of this video, and that's an opportunity for me to, hey, if you are watching this video for the first time that you're here on our channel, if you haven't subscribed yet, please do subscribe, because we have almost over 300 videos as we speak, and more content is coming on a daily basis for you to find value in your education on option or stock trading. So volume weighted average price is VWAP. That's a natural support and resistance. We are going to show you on a chart what it looks like. So as of now, for you, just gather this knowledge if you have not heard about it. And definitely at Successful Trading here, we are big on educating traders, new traders, beginners, because one of our motto here, or if not our motto, it's option trading for beginners. Yeah. So, hey, we leave to that. The second one here that's important that definitely you will come across. So I see a lot of traders who are new within our Discord room. This concept is they're not familiar with it. The Bollinger Band, we will show you what they are. So there is an upper and a lower Bollinger Band. We will show you click this shortly here what it is, and they behave as, the upper Bollinger Band will behave as a natural resistance, and the lower Bollinger Band will behave as a natural support. Then we have these. They are plural because moving averages. What are moving averages? Mainly two of them. Well, yeah, in two categories, right? SMA stand for simple moving averages. Yeah. And they can be defined over 3 period, 8 period, 9 period, meaning how many candlesticks are they doing the averaging over, regardless of the time frame. Meaning that you could be looking at a daily chart, 3 will mean 3 days, 8 will mean 8 days. If you're looking at 15-minute charts or 5-minute charts, it will mean 3 candle each or 8 candle each of duration, 15 minutes or 5 minutes or an hour, if that's the granularity that you're using on your specific chart. We will illustrate that when we jump to the chart here shortly. So you will see different people use any. So for us here, I believe we use, which one do we use? We definitely use the 20, but not on the simple moving average. Oh, well, let's first define this one because the numbers are the same somehow. Exponential moving average versus simple moving average. So why on earth are we talking about here? What is this complex? Okay, let's once for all define the difference. A simple moving average is an arithmetic average, meaning that, hey, if you ask me average of 3 numbers, 3 closing price, 101, 102, 105, so I will sum the 3 equal and then divide it by 3, meaning they have equal weights. Exponential moving average is what's happened in this case. What is done is that the importance is given more toward the most recent data point. So imagine, let's say, I like to use this analogy. So let's say somebody asks me about my future, because that's what's trying to happen, right? The moving average are trying to give us an indication with the direction that the stock will be going next. So if somebody asks me, they want to know about what I'm going right now, if I give them, let's say, the history of my life over the last 20 years, 20 period, or now, obviously, in these 20 years, which that I did 19 years ago, it impacts where I am today or where I will be going. But I really think that it doesn't make sense that, hey, my most recent past or your most recent past, let's say the last 4 years, the last year, 3 years, they will be giving more information about where you're going. So that's what the exponential moving average, how it differs from the simple moving average. Hence, it's widely used, but it's not a perfect sense that, oh, if you're using a simple moving average, you're wrong. No, absolutely not. So, and as far as the periodicity here, the number of candles on here, we use the 8 and the 20 on the chart that you're gonna see shortly here. But I mean, I've seen other traders, day traders, they can use 3 and 8, and I will tell you why. Most people will use 2. I will illustrate that, at least how we use the two of them. So that's here. This is the first part, right, where we talked about natural support, and I'm calling them natural because, for lack of a better word, really, this is not a trading jargon or anything. I'm just making up. I'm calling the phrase natural support and resistance as we go, because these we will encounter as we trade, no matter what. And then, on the other side on here, if I use a different highlighter, like if I can use a different color, ink color, I don't know which ink color, that's just it. That's just on there, I'm not sure. So, we're talking about support, oops, this is great. So, support and resistance through price action. That's what's going to lead us into the chart, right? Because in the chart, we will need to identify places where, hey, the stock have had a hard time going over. That will be an area of resistance because it didn't find more buyers to propose it higher. And then how to find places where the stock prices range, where the stock have had a hard time going any lower, because at that point, more buyers come in and they took the price back up, exactly as we showed here. So this illustration here, I mean, we try our best. So this area here, so the price came down here at this level, buyers, then it went back up, bouncing here again, bouncing here again. And then we're going to show you that actually the number of times. So when you are at any given point of time on the chart, instead of me talking about this here, let's go into the chart. So for the second part of this, let's move on to, we have a tool here that we use. It's a free tool called TradingView. So what it is just really, it's one of the best tools for charting. I mean, if you have not gotten experience for it, we have a video on here to how to set it up. First of all, when you are a subscriber in our subscription trade alert service, we definitely teach you. That's the first thing. On your first day, we teach you how to set up your charting if you have never done that before. So Here, we can see pretty much everything that we talked about before. The upper line here, dotted line, red in red, it's the upper Bollinger. That's what we were talking about in the previous section. The lower one is the lower Bollinger. Yeah. Then the moving averages. The moving average, you can see here EMA 8, EMA 20, that we use. So the yellow one is this one. So meaning it's the recent momentum. So use that phrase. Keep that phrase somewhere in your mind because it's going to help you in your trading to say, hey, it's the most recent momentum. Why? Because I'm looking at the 8th one. The most recent 8th one. So in opposition to 20 candles. So that's further. So we are looking at the daily chart on here. So where did we close today? Today is the 12th. This is where Western Digital. This is the stock called Western Digital. But for us on here, doesn't really matter. This moving average are calculated automatically. For us, what we want to show you through this example is how to find support and resistance through price. Through price, yeah? The natural one, we know when you come onto the chart, they're already drawn for you. And I will invite you to use a tool here, the replay button, to see that the price action actually tend to respect these moving averages, the natural ones, very, very carefully. Like for instance here, the stock will have a hard time continuing outside of the upper Bollinger. That's not always the case. I want to stop you right now to say, hey, no. But by and large, most of the time, most stock will have a hard time doing that over a long period of time. So here, on this day here, it bounced, and then on subsequent day, it had to come back to the mean, to the average, to the averages, and then got support off of the average, and then go. So for us here on here, though, the key is to give you a simple way of finding support area through price. Well, at any point of time, all you have to do if you are looking for, let's say, the support, look to the left of the chart. Meaning, if you are here to the left, here you're going to see places where the stock price had many touches. That will be, that's what happens, especially for support. So in this case, if we are to draw a line here, well, you will learn that, hey, by 3 times, remember remember this? Yeah, this is what, so support. So this is it on the true stock. So 1 time here, 2nd time here, 3rd time here. So the zone, if you will, could be, since you want to define a price range or a band between $36 and $37. Conversely, look at how every time that the stock has reached here, it came down 3 times. Here, it tried to go to break out. It failed because the very next day, it started going back down. So 4 times this area here. So the area for between 39 and 40 has been resistance for this one. That's how you see the number of touches in the price band zone, if you will. That price band can be $1, $2 for big stock, but this is like a $40-something stock. $1 or a half dollar could define those zones. So that's how you see it. And then for us here, we put a box around that because that's the price will stay in that range, bouncing between support and resistance. And knowing it, will that be of value of you to trade? We will talk about that next on here. So let's pick another example. So this one was good. Here's another one. Trust me, I didn't have to prepare for this to look them up that much. This is Baidu. Support. Yeah. Resistance. Places where the stock has had a hard time going above. So support here was 117 and resistance here through the price was about 127. And you can go as far back during whatever timeline that you're looking at to see just how. And this is true for any timeline, meaning if you switch to a 15-minute chart, whatever the granularity of it, just look a zone where the price has bounced off several times. the more touches within that zone, the better. So like here, see here, several candles come and touch that price there, which was about 96. So, and here's a little secret for you, which will lead us into the next section. In order, most of the time, like 90% of the time, you will be able to see that a given level was resistance, because the day that the stock goes above it, it has to have a big candle, because that will show conviction, especially when a lot of time has passed by. Because look at this one here. This is between July the 6th and October. July, August, September, October, 4 months. Value was stuck in range here. And then recently, this was a big surprise. We actually have a video on the day that it made that, because we made money off of this. Speaking of making money, how do you then can now, in section 3, part 3 here, how can you incorporate this knowledge into your trading using support and resistance? Because that's what's all about. Well, for you, it will be a matter of determining this. First, you two things. The two types of trade you can have, right? When you identify support, you will know that the stock has bounced off of that support, meaning that's your opportunity at that price to say, hey, if it keeps below that, then you go long. That's a simple trade. So you will set up an alert. If you are using this tool, for instance, you will set up an alert here. The way to set up an alert is very easy. So I just right click anywhere on the chart, say, hey, if the price is crossing whatever value, and look at this. The beauty of it is that it's not just price. You can use, we didn't talk about this one. You can use your moving averages. You can use VWAP, the other one, and the Bollinger Band. These are the 4 we talked about. Yeah, you can determine that if the price is above them, then you go bullish. Conversely, for you, if you know here, hey, this stock every time has bounced off of here, that's your opportunity to buy puts. I'll go short on the stock, because in the past it has shown that it could not do that. That's how you set up easy trades. And then on a day such as this one, you will, something big is happening. So a candle with conviction. But typically when that happens, stock will have tendency to come back and retest. And the retest will typically always be around moving averages. So this one right now, I was talking with a trader yesterday on one-on-one coaching, saying, hey, notice what happened here on Baidu? Well, if Baidu is able to bounce off of this, because this it has done now, there's support now. So here's the thing, the other thing, right? Once a stock goes above a previous resistance, that resistance becomes its new support. Yeah, let's give that concept, let me repeat that. So, especially when a stock have had a resistance for a long time at a given range, when it goes outside of it and it come and retest, that will act as support. So, prior resistance above it will tend to act as support. So this is what we're talking about, that, hey, this thing, this price here, 128, was resistance for the longest of time, right? So now this resistance becomes support. That's a concept that at least we expect that. We expect that. Well, if it breaches that, then we know it's going to be coming down. And it's going to be coming down toward to, let's say, the prior areas of support, hence setting up again opportunity for you to trade that. Okay, so let's go to another chart here. Because this thing, you will see them all over the place. That's what's the basic. Here's an example on here. This stock was in range. This is pins, was in range. We see several touches here. I mean, my drawing is not that great, so let's consider $32. Yeah, let me zoom in a little bit. So $32 as support, and then resistance here was 38. And they stayed like this from August 3rd all the way to September 24th. So notice a commonality to the other one, a big candle, and then a retest. That's the key. That's the key. So meaning that once it's doing this with the knowledge that you have now, for you will be looking at chart looking, oh, that's for the resistance. Why? Because let's say not quite one touch, two touches. So for the longest of time, this is how long is this? July 31st. So this is August all the way to September. That's a lot of time. 2 months where a stock is in range like this and then broke above it. But instead of, if you went long, people who went long here, they were a little bit early into that move, right? So for you, in your mind now, with this knowledge, you know, it will likely come and retest, got support, and now you can go long on it. This is how you can incorporate this in your, you can incorporate support and resistance trading into your set of strategies as a beginner to really, really help you take your account to the next level. We hope that you find this content of value. Please go ahead, subscribe for more of this type of content, and we will continue to cater the content of this channel to your liking. Until the next time, we bid you adieu. Bye-bye. Good night.